Good day, and welcome to Q3 and 9 months FY2024 conference call of Nirlon Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, Ms. Jain.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Nirlon Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the third quarter and 9 months ended of the financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's conference call and hand it over to them for their opening remarks. We have with us Mr. Rahul Sagar, Chief Executive Officer and Executive Director, Mr. Kunal Sagar, Promoter and Non-Executive Director, Mr. Manish Parekh, Chief Financial Officer, Mr. Ashish Bharadia, Vice President, Business Development and Investor Relations, and Mr. Jasmine Bhavsar, Company Secretary and Vice President, Legal and Compliance Officer. Now, without any further delay, I request Mr. Kunal Sagar to give his opening remarks. Thank you, and over to you, sir.
Thanks, Purvangi. Good afternoon and welcome to the earnings call for the third quarter and 9 months ended of the financial year 2024. Let us take you through the financial performance of the company. For the quarter under review, the company reported a total income of 153 crores, an increase of 6.2% on a year-on-year basis. EBITDA stood at 121 crores, which grew by about 2% on a year-on-year basis, representing an EBITDA margin of 78.93%. Profit after tax was 52 crores, a decrease of approximately 3% on a year-on-year basis, while PAT margin was 34%. As regards the 9-month performance, the company reported a total income of approximately 453 crores, representing an increase of 6% on a year-on-year basis. EBITDA stood at 359 crores, an increase of 4% on a year-on-year basis, representing an EBITDA margin of 79.18%. Profit after tax was 154 crores, representing an increase of 43% year-on-year on a year-on-year basis, with a PAT margin of 34.08%. On the operational front, the average occupancy rate for the company as a whole, that is NKP and Nirlon House combined, was stable at 99.6% for the third quarter of the financial year 2024, and as on the 31st of December 2023, NKP was 100% occupied. At NKP, EY has renewed approximately 39,000 square feet of space. Adani Power renewed 9,000 square feet amenity space, and an amenity space for a gym was licensed in December 2023 for approximately 6,700 square feet. With reference to the questions from shareholders about potential restructuring or other possible value-accretive measures, discussions and consultations with concerned parties to resolve relevant issues are likely to continue for some time. The company understands the importance of this aspect for investors and shareholders and will communicate any decision taken in this regard to investors. As regards whether the company intends to move to the new tax regime, after a careful analysis and deliberation in board meetings, the company has decided to stay with the old tax regime for the present. This is primarily due to the accumulated MAT credits available for set-offs in the old tax regime, where the company estimates the financial benefits of moving to the new tax regime for financial year 23 and for financial year 24-25 will be nominal, whereas the likely benefits to minority shareholders of a potential restructuring by remaining under the old tax regime are estimated to be appreciably greater. Accordingly, there is little to be gained by making an irreversible move to the new regime at this time and closing the option to potentially greater gain from benefits under the restructuring available only under the old tax regime. This position will be regularly reviewed by the company for any change in circumstances. Finally, we are happy to inform you that the board has approved an interim dividend of 15 rupees a share or a payout of 150% on the face value of each share for the financial year 23-24 in its meeting held yesterday. With this, we conclude our opening remarks and open the floor to questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Dilip Jain from Ayush Capital. Please go ahead.
Yeah, very good afternoon to everybody. The decision to continue in the old tax regime to maintain future restructuring flexibility is leading to a higher tax outgo, thereby reducing our cash flows and our ability to pay a higher dividend. Sir, you had promised to consider a special dividend to compensate minority shareholders in the last conference call. Kindly let us know your decision taken on this. I'll go ahead with my second question. In the September AGM, we were updated that value addition or monetization of Nirlon House was being assessed and evaluated. I would request you to share the developments on the same. And my last question is, we were supposed to be in the last phase of a possible restructuring conclusion. So any update on the same would be highly appreciated. My best wishes. Thank you.
Thank you. Thanks, Mr. Jain. As far as your question on the tax regime goes, as mentioned in our opening statement, we clarified that the benefit of moving to the new regime at this point is nominal, if at all, because the company has accumulated MAT credits, which it is using to set off its tax liabilities under the old tax regime. This credit will lapse if it is not used under the old tax regime, and as a result of this credit, there is no benefit at this moment to move to the new tax regime. So we don't have a higher tax outgo by staying with the old tax regime now. In fact, by staying with the old tax regime, it allows us to keep the option open should there be to use any benefit that is available under the old tax regime, depending on any potential restructuring in the future. So there is effectively very little to be gained at this stage by moving to the new tax regime, and we are not losing by staying in the old tax regime. This is potentially for the financial years 23-24 and for the financial year 24-25. So do take that on record. It's not that we have a higher tax outgo as a result of staying with the old tax regime, and hence we are continuing with the old tax regime at this stage. As far as your question on Nirlon House goes, we have begun the process of evaluating and moving forward with what kind of value addition we need to do with Nirlon House. And as that process, and we take decisions in that process in terms of which direction we want to go, and we'll certainly make sure that we update all of you.
Sorry, your audio is not coming clearly.
Yeah, and so about the restructuring conclusion, so it's been quite a while, right? So it's been about 8 or 9 quarters since we've been discussing the restructuring. I presume that we were in the last phase of a possible conclusion. I understand that this is a time-consuming process, but if you could just share, a little information and to us minority shareholders, we would be really grateful to you, sir.
Yeah, as we said in our opening remarks, the discussions and consultations to address the issues that are still open are likely to continue for some time. So I won't categorize it. We won't categorize it as something that is in the final stage. That's not something that we've indicated on our calls or in any information that we've put out at any stage. We are moving on it in a systematic way, which essentially looks to resolve whatever issues are there and move forward. But as we said, those discussions are likely to continue for some time.
Okay. All right. Thank you, sir. Thank you very much.
Thank you. Next question is from the line of Kiran Gandhi from Capital Growth Advisors. Please go ahead.
Hello. Thanks for taking my question. Sir, just wanted to understand in how much time can we expect the restructuring to get completed? Since the earlier participant also asked, it's been quite a long time. And with the whole market, the stock price hasn't performed that great, the restructuring being a very, very key determinant of the wealth creation for the minority. How much time can we expect this whole process to get finally completed? Because we have been listening to this problem since quite a long time now. Any possible further time length will be appreciated from your side, sir. Thank you.
We don't have a specific time frame to mention at this point. We won't want to speculate on that, as we've mentioned in the past. So nothing different from what we said in our opening statement.
Okay, sir. Thank you.
Thank you. Next question is from the line of Ranbir Singh from Yashvi Securities. Please go ahead.
Hi. Hello, everyone. I hope you guys are doing well. So I had 2 questions. Number one was relating to the MAT credit. What is the quantum of the MAT credit that you guys have in your books right now?
It's approximately 30 crores, just under 30 crores.
Okay. And just from a shareholder's perspective, because we don't understand, why is it taking so much of time? What are the roadblocks that the management is facing in doing this process of delisting or whatever you guys are up to? What are the roadblocks or challenges are there any challenges that you guys are coming across?
So we wouldn't want to specifically get into on this call in terms of what are the specific issues. I think that would perhaps be more confusing than in any way clarificatory. There is a process or regulations that one has to follow and that we have to make sure that we are compliant with as a public limited company. And we are ensuring that we do that as we move forward with discussions. It is taking some time to come to a conclusion on this matter. But we do continue to work our way through the various issues that need to be addressed.
Okay. Thank you so much. Have a good day.
Thank you. Next question is from the line of Yash, individual investor. Please go ahead.
Hi, good afternoon. So I have a twofold question. The first one is, what was the reason for low growth in this quarter on a year-on-year and a quarter-on-quarter basis?
Sorry, may I request, what would you mean as low growth in this quarter? Because the numbers have grown by about 6.2% in terms of the total income. If we can just ask you to be a little bit more specific, we'd be happy to try and answer.
Absolutely. So what I meant was that if you see the license fees, which is actually the major contributor to the total income, that only grew by 1.1% on a quarter-on-quarter basis and 3.6% on a year-on-year. So just wanted to understand the metrics as to what happened over there.
These are basically license fees that are coming from the existing contracts that are in place, and potentially there could be escalations in one quarter as opposed to another quarter. These are basically all fixed contracts that are currently in place in NKP. We can also clearly say that that all escalations, etc., are happening as contracted, and some of this could also be as a result of this Ind AS, which is basically straightlining the revenue as well. So there's nothing that we want to say which is significant from an operational point of view. The park remains practically 100% occupied, and all contractual escalations are happening. Some may happen earlier, some may happen later, but everything as per the contract. And in any case, the numbers are as per Ind AS, which is 100% straight line.
So it may be better.
All escalations are straight line.
Yes, it may be better to look on it on a annual basis rather than a quarterly basis, which may have an accounting entry in one which may not be there in the other, just to try and explain a little further. So as Rahul said, there's nothing operational of any significance that has been any different from what is planned, budgeted or projected. So just to clarify that part.
Okay, fair enough. And the second question was, what kind of growth would we be expecting, say, next year for FY25?
We don't have to speculate on the growth.
Our growth is essentially driven by two things. Escalation of our rents, because we are largely fully rented, and renewals in the event we have somebody leaving and the new party is coming in. So there's also at this level where we are pretty much 100% occupied. There's also these are the two drivers of growth or of an increase in the top line, the two main ones.
Sure. Thank you so much. All the best.
Thank you.
Thank you. Next question is from the line of Satinder Singh from Eon Infotech. Please go ahead.
Yeah, thanks for the opportunity. So, just continuing with the growth levers, okay, like you mentioned that the growth levers primarily for an asset which is already 100% leased out is in the form of the renewals and the annual escalations. I think it will help to give a flavor of the lease expiry profile and the escalations due, okay, and the mark to market in your presentations going forward. So that's one suggestion that I had to offer. Second was on if you could give some flavor on the progress on the Morgan Stanley upcoming renewal or they're moving out. And finally, sir, I had just again one more suggestion. This was regarding the annual valuation exercise, which is now due in the next 45 days or so. So our feeling was that so we have a property in NKP which is about 145 or 148 rupees per month, which translates into about 1750 rupees per annum as rental. Against that, based on the previous valuation, if you calculate the per square feet rate works out to just about 18,000, which means we are talking of a cap rate of almost about 10%. As against this other commercial real estate properties as owned by various REITs, they typically are priced at a cap rate for this kind of a property at maybe about 8%. So our feeling is that maybe if you could work with the valuer to understand as to how is it that other REITs have their properties of comparable quality or even lesser quality, typically valued at 8% cap rate, while we are valued at about 10%, because this could lead to a reset in our market valuation, in our property valuation by maybe about 20-25%. So there is a case for the management to understand as to why does our park get valued so conservatively. So that's one more suggestion.
I think we'll just take the three parts of your question. As far as the lease expiries and the lease renewals are concerned, this year for 23-24, we have just one final lease left to sign, which we expect to sign either later this month or in March. Is that right?
Yeah. So essentially, we have Citibank, which we are going to conclude this year. We have one big renew this year, which has already been concluded, and one in 25 as well. But all in all, we can say that we have not received any indication or any significant notice from any licensee expressing their desire to leave or to vacate, and we estimate at this point that renewal will happen as projected and as planned. Of course, apart from the Morgan Stanley, there's nothing significant to say on the licensee front in terms of vacating or in terms of leaving NKP at this point in time. And of course, for MSAS, we have had some indications of interest from existing occupiers as well as external occupiers. So as and when we get clear indications of dates from MSAS, that will continue to develop in the normal course. But first, we need to really receive clear indications of a notice from MSAS as to their dates for vacating.
So just to add a little bit to what Rahul said, as you know, the Morgan Stanley planning is a long-standing one that they will be at some point moving. We confirm that we haven't had any formal notice to vacate from them so far.
Yeah.
It's potentially something that we will get, that the move is likely to begin in phases in 24-25. We've anticipated this for a long time. We have, again, to reiterate what Rahul said, because it's very important for us, we have strong interest from other prospective occupants to replace the vacating licensee in phases and at market rates in the normal course. And of course, as we ourselves get more details on this transition, we will make sure that is communicated to all stakeholders. So that's as far as the lease renewals and the lease expiries for this and the Morgan Stanley go. If we understood your question on valuation methodology correctly, this is a suggestion that you are making to us to perhaps look at the valuation methodology to better reflect market value of the asset. Was that your suggestion? Mr. Singh?
Sir, the line for the participants. A reminder to all the participants, you may press star and 1 to ask a question.
Is Mr. Singh still on the line, Mr. Satinder Singh?
No, sir, his line broken.
All right. So if he comes back on, we can just check whether we understood his suggestion correctly and whether we can explain anything any further.
Sure, sir. The next question is from Lakshya Jain, individual investor. Please go ahead.
Hello. Am I audible?
Yes.
Yes. Very good afternoon, sir. First of all, congratulations on 100% occupancy.
Sir, one moment.
Hello.
Can you try once again with your question, please?
Hello, is it better now?
Yeah, go ahead.
Yeah. So first of all, I would like to congratulate sir on 100% occupancy at NKP. My first question, sir, sir. As one of the shareholder has asked already about the Nirlon house, my question is regarding the same thing, sir. Are the tenants and landlords cooperating with us, sir, for the same?
Yes, we have nothing significant to say, anything more significant to say about NH, about Nirlon house. We have no issue with any of the other owners or any of the licensees. At this point in time, there's nothing significant to say. And as and when we come to the next step to see what is actually going to happen with Nirlon house, we will keep you informed. But we are working on some particular points very closely.
Just to clarify, as we've mentioned in the past, this building is owned 75% by Nirlon, and the other 25% undivided interest is owned by an entity called the Nirlon Foundation Trust. So the idea is not to be vague or non-specific about it. It's just that we have to move together with the trust. And again, we follow that process and we'll keep moving forward. From the Nirlon side, we're doing everything that needs to be done, and we are working with the trust so that we do everything necessary on that side as well. So, yeah.
Yes. So the trust is open, sir, for the outright sale of the entire Nirlon house?
We won't want to speculate on where that process is, because that will just be more, that will be confusing for no reason. This is a very laid out process that we have to follow, and we are moving along that process. All right,
sir. Okay. My next question, sir. There's a lot of buzz happening around MSM REITs, sir, which include single asset REITs. So, sir, are we in the process of transferring Nirlon Knowledge Park into an SPV and Nirlon holding that SPV? By doing this, there will be no need for us to delist, sir. We can continue to stay listed, and the dividends will also be tax-free. So it is win-win for everybody, including GIC, who is the majority shareholder, and minority shareholders like us.
Sorry, if you could clarify, are you making this as a statement, or are you asking us if this is a process that is ongoing?
Yes, I'm asking whether this is the process which is ongoing.
No.
Okay, we have no plans of shifting this, transferring NKP to SPV.
There is no process of the nature that you described that is underway.
I didn't get it, sir. I'm sorry.
There is no process.
Okay.
The process that you have described is not something that is underway at Nirlon. This SPV and the transfer of the company into an SPV, that is not a process that is either being discussed or that is ongoing at Nirlon just now.
Is it possible, sir, legally, what I just asked now, this transferring the Nirlon Knowledge Park asset into an SPV and Nirlon then holding that asset?
We won't want to comment on that. It's speculative.
No, because today morning, an article came in Mint regarding the same thing, sir, that single asset REIT is like possible now.
That again, it's what you're describing is not something that.
No, sir. There's nothing guesswork or speculations. I'm just telling the fact which just came today morning, and actually happening for the past 4 months, and today again it was more stressed upon.
Yes, so we'll take your point on record without commenting on it in any way, because we're not sure exactly what exactly you're referring to in terms of what happened this morning.
No, this discussion is happening for 6 months. It was stressed upon again today. This SPV thing, single asset.
Yeah, we are not aware of this discussion, and we wouldn't want to, or this particular process or this particular transaction that you are referring to. So we wouldn't really want to comment on it, please.
All right. No problem, sir. No problem. Okay. So because there is no other option with us. Either we have to be listed. If we want to stay listed, we have to transfer it to SPV, or else the other option is getting delisted.
The point is noted, certainly.
Yeah, the point is well noted.
All right, sir. Yeah. Okay, sir. Thank you, sir. Thank you for the opportunity.
Thank you.
Thank you. So we have line for Satinder Singh reconnected. Satinder Singh, please go ahead.
Yes, sir. I mentioned my question and the line got dropped off. You want me to repeat it, please?
No, we were with regard to the valuation, etc. Yes, I think you can briefly.
We just wanted to understand whether you are making a suggestion to us to consider the revaluation process that we follow now. Did we understand you correctly?
Yeah. So my suggestion was only that our valuation, as done in the past, does seem significantly lower than the valuation done for other similar commercial real estate assets all over the country, as published by various REITs. So we are talking of a large now set of maybe 40, 50 assets, which are valued, and those valuation reports are available in the public domain. We have probably an asset which is even better than 90% of the assets that are in REITs. So you have a wonderful asset which I think you are managing wonderfully well. And those get capitalized at typically 8%. We have an asset which gives us 1,750 to 1,800 rupees per annum as the rent. Valuing it at 17 to 18,000, which is about 10% cap rate, does seem very low. So we were just wondering if in the interest of maximization of shareholder wealth, you could look into this, please, and work with the valuers to see that why is it that we are so much out of line with so many assets. So we are talking of a large pool now of assets whose valuation is in the public domain. So that's the suggestion, sir.
I think we'll certainly take a look at what you said, and we appreciate your suggestion and your explaining it so clearly. Thank you.
Right. Thank you.
Thank you. Next question is from the line of Ritvik Jain, individual investor. Please go ahead.
So good afternoon, sir. I just wanted to know what is the debt repayment plan and when do the principal repayment starts?
The principal repayment of our loan is broken down into two phases. The first phase begins after 5 years from when the loan was taken. So we've had the loan now for roughly 2 years. And in another 3 years, the first part of the principal repayment will be due, which is 25%. Then we have just a second, please. I'm just getting a clarification. So just a clarification, sorry, that was my mistake. After 5 years, we have a situation where we have to pay 5% a year from years 6 through 10, which is 25%. And finally, we have a bullet payment at the end of 10 years of 75%.
And one more question, sir. What will be our dividend payout be when it starts?
Sorry, our dividend has been...
when it starts, when the debt repayment starts, that's not something we can really...
again, our effort would be to ensure that we have a steady dividend going forward. So these are the current terms on our debt. What the terms will be after 3 years in terms of how we would look to best manage the loan part is something that we will continue to discuss and evaluate over the years. Our effort will, of course, be to see that the dividend remains consistent regardless of what our debt repayment situation is.
Thank you, sir.
Sure.
Thank you. The next follow-up question is from the line of Satinder Singh from Eon Infotech. Please go ahead.
Yeah, thanks for the follow-up. Just one small question. It was mentioned that there's a MAT credit of about 30 crores which is unused. So is that as of 31st December and at 23? And is the understanding correct that this will get used up by 31st of March 25 in normal course? Resulting in no real tax loss to the company vis-a-vis converting to vis-a-vis the restructuring or converting to a new regime. Is it understanding correct? 30 crores as of 31st March 23 to be used up by 31st March 25?
So we'll answer the question in two parts. The first part is that the approximately 30 crores of MAT credit is as on 31st of March 2023. Now, the use of that is expected in approximately 2.5 years from 1st April 2023 based on current projections. So please note that this is something that can change. It's a forward-looking statement. It's a projection. So do look at it in that context. At this point, this is an estimate that it will take about 2.5 years to be utilized if we continue under the old regime, as we are currently doing.
Right, sir. That's very clear. Thank you. Thank you. Thank you all.
Thank you. The next question is from Prakash from Lapis India Capital. Please go ahead.
Hi. I've got two questions. One is on CAM. Is CAM positive for us? Do we make some money on the CAM charges? And my second question was, if I look at the total expenses, given that park is now fully leased, is it possible to create some savings from total expenses?
So, the first, as regards to your question on CAM, we do make, we have a clear fixed margin on CAM, and it is consistently a value addition for us. We have an open book system, and we have a fixed margin, all of which is very transparent with our licensees. We didn't fully understand your second question.
Any potential for reduction in expenses? Is that the question?
Yes, that's correct.
I mean, if you look at the expenses, some are fixed and some are variable. Of course,
sorry to interrupt you. You're sounding a little distant.
Okay. Of course, there are fixed expenses which are also of a statutory nature, for which it's not really possible for us to do much. The other major expense is, of course, always the repairs and the maintenance, and that will vary from year to year. So yes, theoretically, it's always possible to reduce the expenses, and we are looking at that extremely carefully. But as I said, it's a combination of fixed expenses which are more of the statutory nature, and of course some variable expenses like repairs, etc. And we also want to ensure that the park is running in the best possible condition, and that the licensees are happy with the facilities, etc. So we will look at all these factors and points when it comes to expenses. But yes, we do look at reduction in the best possible way, in as much of detail as we can. Thank you.
Additionally, we also look very carefully to see that the increases in revenue are in excess of any increases in cost that we have on a medium and a long-term basis. There may be fluctuations from quarter on quarter, but in general, we would always look to have a situation where we have where there is an increasing, where we have the revenue increases in excess of what expenses may be.
Thank you.
Thank you. As there are no further questions, I will now hand the conference over to Mr. Kunal Sagar from Nirlon for closing comments.
Thank you very much for joining us today. If you have any further questions, please feel free to reach out to either us or our investor relations managers at Valorum Advisors. Thanks again.
Thank you very much. On behalf of Nirlon Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.